The 2024 Stansberry Research Conference and Alliance meeting is back this fall in Las Vegas. And for the first time ever, they've extended their early bird discounted ticket pricing, which means if you reserve your seat today, you can save $450 off your ticket. Head over to www.vegasearlybird.com to find all the details and get your discounted ticket. The Stansberry Conference is truly one of the best business mixed with pleasure industry events out there. Past speakers have included Shark Tank's Kevin O'Leary, Dennis Miller, and Steve Forbes. And of course, all your favorite Stansberry editors will be there too, including yours truly. I mean, I hope I'm one of your favorites. I look forward to this event every year. It's great getting the chance to meet our listeners from the show, whether it's chatting during a break or grabbing a beer at the end of the day or whatever. So I hope you're planning to join us. It's a great event. Go to www.vegasearlybird.com to get your discounted ticket before prices increase. That's www.vegasearlybird.com. So come on out and find me in Vegas and say hello. Cactus, welcome to the show. It's always a pleasure to see you.
You too, Dan. It's been too long. Looking forward to revisiting with you.
Yeah, so I think the last time we ran into each other might have even been I feel like it was at some conference or other, maybe in Las Vegas at the Stansberry conference.
Right.
So, yeah, been a while. And if you've been on the show before, it was before my time because I went and looked through the archives. So you're effectively a new guest to the show. So we should tell our listeners who haven't heard from you in some time who you are and what you do. And to me, like if somebody said, "Who's Cactus?" I'm like, he's a real honest to goodness Texas oil man, period. That's like the full description, right? I mean,
exactly. That fits me to a T.
Yep. So, and who better to talk to about that business than someone who actually does it, right? So, the first thing I guess I want to talk about is I'm sitting here in front of my computer and I'm looking at $78 or so for WTI crude. Folks can make money at $78, can't they?
No doubt. Yes, it's they're getting to where they're drilling a lot longer laterals. The economics are looking better between the higher oil prices and people look at the rig counts, and the rig counts are going down. However, what they're not seeing is that instead of drilling 1 mile long laterals like we used to, now we're drilling 3 mile laterals. And so those 3 mile laterals, that one rig is drilling the equivalent of 3 wells 5 years ago. So it's the rig count is a little bit deceptive.
Yeah, that's definitely something you don't hear from Wall Street people these days when they're talking about what's going on with oil.
Yes. And the other thing that's going to be interesting in the future is these horizontal wells only have like a 5% recovery factor. And so 95% of the oil is unrecoverable with today's technology. 5-10 years from now, we'll be able to go back and hopefully harvest another 5, 10, 15% from these wells.
Wow, did not know it was that low. I knew it wasn't particularly high, but I didn't know it was that low. So that's very interesting. Like, Cactus, what's your history in like gassier plays? Any?
Most of what I've been doing has been in the oil plays. I've been, looking at the Haynesville, Marcellus. I have a good friend that just sold out to Tokyo Gas in the Haynesville. He's been there for probably 5 or 6 years and was backed by Quantum, which is a local firm around here. Their actually main offices are in Houston, but they originated out of a little town outside of Abilene called Albany. And anyway, they gave him, I think, like $800 million, and he turned it into 2.7 billion. And so they just closed that deal like a month or two ago. So I keep my eye on it, but it's a little far away from me. That's far east Texas, right along the Louisiana line. Of course, the Marcellus is up in Pennsylvania, but I've been trying to follow that through Porter because he's done such a good job with investigating EQT and everything that they've done. And so those two areas are probably going to be supplying the majority of the United States gas for a long time.
Right. And I find gas really interesting now because it's just been obliterated. I mean, it's just, the pricing has just been obliterated. And, unless you're in, like Permian with like essentially negative break evens, not a lot of folks are making a huge amount of money with gas right now, which is for investors, that could be an ideal entry point, right?
Exactly. I mean, there's so much more upside to natural gas than there is downside. They've already got it so low at $1.50. That's just, you're barely able to even break even. And so I think that is probably going to change once we're able to get, once the Marcellus is able to put in an LNG facility and ship to Europe. I think that's going to have a big effect on the prices. And then also they're currently building a pipeline from the Permian through Mexico to the West Coast. And that will have a big effect. The thing that I worry about there is, the cartels are essentially going to, have to be paid off. I don't know exactly how that's all going to work. In Mexico, you never know. But I do know that they've got it, all the money raised for it, and they're starting construction on it. So that's going to be very interesting to see how that plays out. But that will give Permian gas going to the Orient, and it'll give the Marcellus gas going to Europe.
Yeah, and just for the listener's sake, when you say affects the price, gas is a little bit more expensive in those places, Europe and
yes.
Asia.
For $1.50, I think during the winter, in some of those European winters, it gets up $25, $30. So you're talking about multiple that's huge.
Yep, and then, obviously, there's an arbitrage factor, but that will take a little time to kick in.
Exactly.
Yeah. So it's potentially really an interesting development here, and not one that's going to happen in 5 minutes either, right? It's not something. It's not like we're waiting for next month. And go ahead.
Well, yeah, that's true. But it's getting closer and closer all the time. I have doubts about that pipeline going to the West Coast, but just as soon as, if Trump does get elected and allows the pipelines to be built, out where we can put it on an LNG facility in the water and start shipping it out, I don't think that's going to take a terribly long time, but it's not going to be next month or next year. It's going to take a couple of years to get it done, but I think it's they've got everything all lined out to get it done, and will also make EQT, a vertically integrated major gas company, and so that's going to be very interesting to see how they handle all of that.
Yeah, yep, and I find gas also interesting for the reason that I find things like copper. And even to an extent like uranium and frankly oil interesting, because you can buy an EQT or a couple other kind of big cap well-run companies and expect a really awesome return over the next I don't know, just say few years to several years. In other words, you don't have to take a lot of risk buying a lot of garbagey little companies that you don't know what's going on in them. You can buy the sort of blue chip natural gas producers and expect to do really well, right? I mean,
exactly. I think that's a wonderful strategy.
Yeah. And it's exciting because let's face it, natural gas is not exactly known to be, it's known to be a pretty volatile commodity, right? I mean, we're sitting here talking about how the pricing has been just obliterated, and that happens with gas. It's obliterated and it soars, and it's obliterated and it soars, um, and yet here we are. I mean, it's really kind of calmed down and just settled in, way under $2 here, and yet an EQT is still making money. I just think it's as an investor, few things are more exciting than this to me because of the risk reward proposition. What's the risk reward proposition that you face in your business when you go directly at it? You get the financing, you drill the holes. What's that like?
Mine is more of wildcatting exploration, where I'm trying to find new, smaller traps of oil. Whereas theirs is more of a mining operation. They know exactly what they've got. Their biggest hurdles are pipelines and the technology to drill longer laterals and recovery factors and those type of things. So, whereas these major oil companies used to be, more into exploration, now it's more, I call it mining, because they know what's there. They got to decide how they're going to get it out, how they're going to get it, to the end user, what regulatory problems they have, what, and also furthering their technology on it. I'm not sure about the recovery factors on natural gas. I'm sure they're a little higher than the oil recovery factors, but I haven't seen any official figures out on that. I have to dive into that a little deeper. But, what I try to do in my business is if I can find it's much smaller scale, I try to find a prospect that would give somebody 10 or 15 to 1 return on their money. However, I've got the risk of dry holes, whereas the majors, that's more of a mining operation. They're going to make a well every time they drill. So mine's, comes with inherently more risk, but it also comes with more reward as well. When you do find those good fields that can give you a 10 to 1 return on your money, then it makes it more like a business than a crapshoot at a casino.
Right. So exploration is an interesting topic because again, in those other actual mining industry, like just pick on copper. What you see is before about 2005 or 6 or so, the peak of the housing bubble, lots of new discoveries made every year. Then after that date, after about 2006, there are, I think, 4 years where no new discoveries were made. And now just for regular sort of GDP growth globally, Robert Friedland, one of the big entrepreneurs in the space, says we need 8 Escondido mines, 8 of the largest copper mine in the world, just to keep the economy, humming along, the global economy going. And they don't exist. So what's the situation in oil? Are we, is there a dearth of exploration? Are there enough guys like you out there wildcatting?
I missed a little bit. There was a gap in your
sorry.
Audio, but anyway, are there enough guys now? Yeah, yes and no. I'm a dying breed. I'm a mom and shop or mom and pop type shop. I'm very small. I've got 2 or 3 employees, but I've got a group of people. When I get ready to drill a well, I've got my drilling contractors, my loggers, my dirt people, the people with the dozers that build the location. All these different people that I contract with to drill my wells. The one thing that I do see, particularly in the Permian Basin, which is the most important basin in the United States, basically delivers 50% of our oil output in the United States. So all the others, Alaska, Oklahoma, California, Louisiana, they all together combine about 50%. Permian provides 50% of the oil. But what I see there is it's such a consolidation. Really, 5 companies now control about 80% of the Permian. You've got Chevron and Exxon and Diamondback and Oxy and Conoco. And those 5 companies control about 80% of it. So there's not really room for any little guy anymore, or very seldom is there room for a little guy. Now, where I drill is on, they call it the Eastern Shelf, which is the eastern part of the Permian Basin. And it's much shallower. My wells that I drill are anywhere from 3,000 to 6,000 feet deep. Whereas when they're out in the basin, they've gone out there and they're basically at 4 different benches of the Wolfcamp. And those wells are typically anywhere from 7,000 to 10,000 feet deep, and then they'll drill a 3-mile lateral. So now the new play out there is, and I think the reason that these companies are buying up everybody is there's a new play called the Barnett. Well, the Barnett Shale play was the first horizontal play, in the Fort Worth Basin. It was in the Fort Worth area. And so now all these companies are going back deeper, drilling in the Barnett and having a good bit of success. And so they'll be able to control that. And they also can control the oil prices to a certain extent. Between OPEC and those companies, they're not going to go crazy like an independent does. Like when oil prices, back in 15, 16, 17, they were $30, $40 a barrel. You had companies like Pioneer and or the equivalent thereof, and they just kept right on drilling. But they were drilling all of the best locations first that could make money at $30 oil. Now there's not a whole lot of production left out there that you can make money at $30. It needs to be $40 or $50. And so now that they've come back and they've secured all this acreage and they've got all their infrastructure in place, the pipelines, the refineries, the electrical, the water, all of that is in place, then they can go back and drill that Barnett Shale, and probably there are other zones deeper than that they can go into and tap into the oil reserves there as well.
Right. Cactus, are we running out of oil?
No. What's kind of interesting, one time in peak oil, and you kind of scratched your head a little bit.
Yeah, I know.
The oil fields are going to eventually play out to a certain extent. You look at what they're doing in Saudi Arabia, Garbar, that's the ultimate oil field. But if you look at what's in the Permian Basin, I mean, you have oil fields that are in the Wolfcamp that cover literal whole entire counties. And so from an aerial aspect, it probably is on the same level as Garbar. But this is in the very early stages of exploration, whereas Garbar was discovered, I think, in the 40s or 50s. I mean, at some point, that field is going to become non-commercial. But what I question is, that's conventional. What about the
That's
shale?
what I was going to ask. Yeah.
They haven't even tapped into the shales. That's, right. We're not going to be having any peak oil anytime in our lifetimes. Not for our kids or our grandkids, most likely.
I see. That was, as soon as you mentioned Guara, I was like, well, it's still conventional, which is amazing, considering how long it's been going. So you like oil, you're not that much into gas, but you admit gas has, got a lot of more upside than downside right now. Is that just, is it just too different, like technically, or like you're an oil wildcatter and that's who you are and that's what you do and that's all there is to it? Like you're just not going after the gassier stuff because it's just not what you do. Is that correct?
Well, the production on the Eastern Shelf where I am is primarily oil. We have a little bit of associated natural gas, but the gas that I produce is maybe a tenth or a 20th of the income that I get from oil. Whereas in the Permian Basin, it's a bigger percentage. Even though it's oil fields, they have a higher GOR, gas oil ratio. And so they have to go places with their gas because they can't produce just the oil without the gas with it. So as you're bringing that up from the ground, you have a conglomeration of water, oil, and natural gas. And then once it gets on the surface, we separate out the water, the gas, and the oil, put the gas in the pipelines, the oil in the oil tanks, and the water we inject back into disposal wells. So, and that's another thing that's a little shaky out there right now is we've been putting all this water into these different zones, putting water back, and you would think that the pressure would equalize, but it doesn't really work that way. And now it's causing some earthquakes, and they're low earthquakes, but I was in my very first earthquake in Lubbock, Texas, about a year ago, and I was in the 8th floor of a nice hotel, and I'm with my family, and all of a sudden our cocktail table starts shaking, and they were like, "Well, what's going on?" I said, "That's an earthquake." But that's the first one I've experienced, and they haven't done any damage. But the Railroad Commission, which governs all the oil and gas in Texas, they're looking into it, and there's got to be some other places to dispose of water, or another way in which to dispose of water in order to keep these earthquakes from happening.
Earthquakes in Texas.
Yeah, we had one here not too long ago either. No, over in Baltimore, or New Jersey at least. But Cactus, it kind of brings me to a question I had for you about regulation, legislation. It's always kind of in the news. I mean, what legislation is kind of I don't know, either making life hard or influencing things, too much or significantly in your view? We talking about the natural gas export, decision a couple months ago. Just wondering when you think of legislation, what do you think about?
Well, Texas is a very friendly oil and gas environment. And so when you're building pipelines or wanting to build an LNG facility out on the water at the Gulf Coast, it's a lot easier to get things done. But when you look at what Biden has done, like he shut down the wilderness area in Alaska, so that exploration has been shut down. He shut down pipelines that they want to try to take gas from Pennsylvania out to the water where they could put it in these LNG facilities and ship it all over the world. So, he shut down a lot of those areas, but I don't think he could shut down Texas. But the two biggest gas areas are Marcellus and the Haynesville. And Haynesville is closer to the Gulf Coast, a lot easier environment. There's probably, I'm going to guess, close to 10 different LNG facilities where they're freezing the natural gas and shipping it all over the world. But, Marcellus is basically supplying the East Coast and the Northeast with gas for their winters and heating and cooling. And so the other regulatory thing that I see them doing is they're trying to shut down gas stoves. And all the chefs across the Northeast are going nuts because all chefs want to cook with gas. It's much easier to control the heat gas-wise than electric-wise. So, I mean, my wife loves these cooking shows, and they're all up in upheaval over that. And they're a little bit more on the liberal side, being really creative chefs. But if you're going to take away their gas, they're going to be very unhappy.
Yeah, that's insane. I feel like that's one of the things that they kind of talk about, and then they'll go do something else. They'll say, well, we're not going to take away your gas stoves, but we will do whatever else they want to do. But as we were talking a minute ago, you mentioned Pioneer, and I just happened to be on oilprice.com, and I see this headline in front of me. Exxon's $60 billion Pioneer deal set to create energy supergiant. So you mentioned how, for example, 5 majors control 80% of the Permian. When you see a deal like this, does it have anything to do with what you do? Do you care about it at all?
Of course, I follow it, but they're in such the big leagues. I mean, if I'm going to go out and drill a well, it's going to cost me less than $1 million. The wells they're drilling are generally $10 to $12 million wells, and so they require 10 times the capital that I do. And I'm 69 years old. None of my kids want to take over my oil company, so I'm kind of slowing down a little bit. I'm still drilling some, but I'm as much as I'd like to follow it, I'm too at my age. I don't really want to go to Wall Street and raise a bunch of money and say, "Hey, look, I want to Permian. We want to try to buy some properties," and because really every acre of land down the Permian is leased. It is all held by production leases. So you're not going to go find a prospect over there and go up to a landowner and say, "Hey, I want to lease your land." That's just it's all been tied up. So,
right. And you're not bumping up against these guys in the Eastern Shelf?
What's interesting is some of the small guys that have been in Midland, that have kind of sold out and they've recapitalized. They're actually coming over here in the Eastern Shelf, Permian Basin. We started about, I'm going to say 5 or 6 years ago, drilling horizontal wells in conventional zones, in sandstone reservoirs. And we've had some luck with it. But we're still on a learning curve. We've found some really good wells, and we've drilled some really bad wells, and we don't know why the bad ones are bad or the good ones are good. We've got ideas about it, and we're still working on it. But these things evolve over time and trying different things, different frac jobs, different lateral lengths, different, we were trying all kinds of different things. And we made a lot of progress, but we're still not where we would like to be. In those instances, what I try to do is I try to get in front of these plays and put together blocks of acreage and turn them to somebody that's capitalized, and I don't have to worry about the day-to-day operation. I just take a royalty interest and let them have at it. And so, for instance, I put together back in 2011, 12, I put together blocks of acreage in Eagle Ford. And we came in there and we drilled the Eagle Ford, and then now there's another zone that they're going back into. I just got some new division orders where they're going back and re-drilling an area that I drilled up 10, 15 years ago. So once again, the new technology, new pay zones have enabled us to keep on producing and doing new things out there.
I'm curious technology. Of those majors, of the majors that you mentioned and talked about, and technology. Which ones might be like the most forward thinking as in terms of or putting the most energy or investment into that? In your
if you take a step back and look at them, I think Exxon's one of the best run corporations in the world. I think they're just amazing at what they do and how methodical they are at it. And they look out 5, 10, 15 years of what they want to do. The ones that I kind of think might be interesting because they're finally changing their tune are like Shell and BP that were, going all in for this green stuff, and they can see that they're not making a penny on it. And so they're changing their business plan and to go back after oil. And I think, well, maybe those companies have more upside than a Exxon or a Chevron. I'd have to look at it a little closer before I recommended it, but that's just my initial perspective of it.
Yeah. No, it's something I mean, we've talked about here with, just the whole green energy push and what influence that is having on everything else. Pick whatever you want to talk about. It's interesting, that conversation, and it does. I don't know. I guess I'm just curious your thoughts on that too.
Well, there was so much money thrown at green energy that, and it's all flopping, and so those people are not going to continue putting money into things that aren't making money. BlackRock was such a big deal, with their ESG or whatever their deal is, and they're finally having us take a step back and say, hey, we're not making any money, and because they put all those regulations and that, because there are so many different boards, the state of Texas has said, bye, we're not doing business with you anymore. They sold all their BlackRock stock, and I think Louisiana's getting ready to do that as well, or may have already. And so some of those companies they're going to have to change what they're doing, or they're going to suffer the consequences.
Yeah, it's another version of go woke and go broke.
I do like that saying.
Yeah, I mean, it's, Anheuser-Busch, Disney. Now, actually, Porter argues that maybe Starbucks is one of these, right? Because they started letting homeless people come in and use the bathroom, and he said it turned them from a business into a charity, and now their results are sucking wind. They're doing terribly. So, it's at some point reality does kick in. Reality kicks in, and we all want our standard of living. So we know it's based on oil and gas, and it's not based on a whole lot else. Maybe we'll see more nuclear or something that's growing around the world, although not in the United States so much. But yeah.
Yeah,
But you know what, though, Cactus? I'm grateful to the climate people because they kind of turned oil and gas into a better bet for me.
And I appreciate that. Got a glass of wine, I would cheers you there.
Yeah. Thank you, climate scam nuts.
Oh, man.
Yeah. So, but day to day, you and your friends aren't wringing your hands about these people, though, right? You're as you go about your business.
Right. Yeah, we're just go about our business, and our business has always been terribly cyclical. And I don't know what's driving Saudi Arabia to. I mean, they've really pulled their production back, and they're really wanting to fight for that $80 to $100 price per barrel. And so I think that's done somewhat artificially. And what's going to change their mind, I don't know. I don't know if they're in Russia. I know Biden has tried to put pressure on them so that the oil price will go down, and they're just not caving in. The next thing I see on the horizon that, when Israel goes ahead and invades southern Lebanon or southern Gaza, I don't know, and they essentially annihilate the rest of Hamas. What is the rest of the Arab world going to do, with that going down? I've seen some predictions of, $100 oil, or, hell, who knows? But I don't think Biden will have a big effect on what Israel's going to do over there. But the Middle East, things are in constant turmoil and constant change. And then there's no way to predict what's going to happen next.
Right. And Brent crude is already 83 today as we speak. So 100 isn't that far off.
Well, it's not. It's not. But
yeah.
And as it climbs to that price range, is Saudi going to go ahead and put more of those barrels on the market, or are they going to still defend that particular price point?
Right. And, and OPEC is not just Middle East, right? It's there's other countries that probably, I would imagine that, you have a harder time. If you're OPEC, you probably have a harder time keeping track of whoever, Venezuela or Nigeria or somebody, right?
The other thing that I worry about is we've had 10 million people come across our border, and the majority of them are not our friends. And,
Yeah.
terrorist events are going to become more widespread. And are they going to be more at trying to kill as many American people as they can? Or are they going to try to attack our infrastructure, our electrical grid? The Texas Monthly wrote a big article on the Houston Ship Channel about 15 years ago. And I'm going, boy, that was irresponsible journalism, because all they did was they painted out a plan for a terrorist to take out all of our energy. I mean, if you
Right.
have some kind of terrorist event in the Houston Ship Channel, I mean, that would be catastrophic for us. So anyway, I don't know what all they've got going on, but whatever it is, it's not going to be good for any of us.
Well, I would imagine that immigration is a more urgent concern for folks who live in, say, I don't know, Abilene, than for me. I live in the Northwest. We never think about it.
Mm-hmm. Yeah, you're basically not affected, and so, but they're going to be spreading their tentacles all across the land. And I mean, who would have thought there would be an immigrant problem in Chicago and New York and Philadelphia and D.C. and Boston? I mean,
Sure.
a lot of people, really look down on our governor because he's shipped all these immigrants, to places across the United States so they could get a taste of what we're having. And we're not even shipping, 3 or 4% of what's coming across the border out across the United States. But, we got a lot of mayors squealing.
Yeah. So returning to the topic of oil and gas. You mentioned that you're 69 and your kids don't want to take over the business, but you're still doing it. You can't stop yourself. You're 69, man, and you've made you're a resounding success. Shouldn't you be on the beach somewhere?
Well, actually, I just got back from Florida, so that wasn't too bad.
Okay.
But, it's in my blood. I enjoy doing it. I will continue to do it, not at the pace that I used to do it. But the good thing about what I do is I can do it at my own pace. I don't have to meet a budget every month. I don't have to, find another barrel of oil to keep my doors open. I've got to. I love the risk reward in the, whenever you find a nice well or oil field, you're going, oh yeah, this is great, and then it's kind of an adrenaline rush. And so that's part of it that I do like. I guess the part that I don't like is the regulatory, and now so many landowners are very onerous because through the years, people in Texas have been having big ranches and own land everywhere. They'll sell the land, but they'll keep the mineral rights. Well, the guy that owns that has bought the surface doesn't want anybody to come on his land. Well,
right.
In Texas, the dominant state is the mineral estate. So if I have leased minerals under a piece of land, that landowner cannot keep me out. And so that has created problems. And I understand their problem, but they have to understand my problem as well. And that, I've purchased these rights, and I've got to go in there to make any money. I've got to go drill these wells. And so it's created a good bit of tension. Not very often, but occasionally it'll end up in the courthouse. And, they always lose because it's all cut and dried as far as the dominant state law in Texas. But, different states are different ways. I think in Colorado at one time, they wanting to pass legislation where if you were drilling a well, you had to be like 2,000 feet away from any structure on that land. Well, what's the structure? A barn, a house, and that didn't pass, but it came real close to passing. And I can understand that to a certain extent from some people. I mean, when the shoe's on the other foot, you get a different perspective. And so I don't try to run over anybody. I just try to explain the things and these folks, and anybody that buys a big tract of land, say they buy a 1,000-acre ranch, okay, they've paid millions of dollars for that ranch. They should be savvy enough to know to consult with an attorney if they don't know about, and also real estate agents, what the laws are, and if they got any mineral rights. Now they're not only trading mineral rights, they're trading wind turbine rights, solar rights, so you can retain those if you sell a tract of land, or you can retain a certain percentage of them. So it's Texas law is being rewritten as far as wind turbines and solar panels and going as well.
Right. So after, the Marcellus just kind of blew up and became a big play, I remember all the articles about people. I'm pretty sure it was Marcellus, because I want to say that I just remember the folks, in the East, they just kind of didn't get it. They thought, well, hey, I'm rich. I've got oil on my land, and now I can finally, now they're learning how to drill it, and I can sell it, and I can get rich. And they didn't know that meant like an army of trucks and giant equipment on their property, just basically ruining it. I mean, we had a pool put in our little backyard, and they ruined the entire yard, right? So I remember articles about this, and that's kind of what it reminds me of. I understand the landowners, but, especially in Texas, you'd think they'd get it, right?
The good thing about the horizontal wells is, they're drilling 3 miles in underneath the ground. So the physical portion of land that they're on is not too obtrusive. Whereas when I'm drilling vertical wells, I make a well, I'm putting a pumping unit on it, and it's a little bit, I'm more of the way than these others. And usually those big trucks and big equipment and drilling rigs, they're only there for a month or two, and then they're gone. And so it's not too terribly bad. But if you're not used to it, it can be a problem, and people have to understand what's going to be involved. Like, I've got a friend of mine that has a ranch. In fact, I was there for dinner last night, and he has all these wind turbines. And he gets paid, I think, $80,000 or $100,000 a year for his wind turbines. And so, but I find them just god awful. I mean, I would not do that at all. However, if I had a pumping unit in my yard, or even if I had some solar panels somewhere, to me it's not as ugly as those giant wind turbines. However, everybody's different. It doesn't bother him. He's perfectly happy to put that money in his pocket, put up with the wind turbines. So everybody's looks at it a little differently.
Yeah, it's a trade-off. It's definitely a trade-off. You got to make a decision. All right. I think we are at about the time when we need to ask our final question, which is the same question for every guest, no matter what the topic, even if it's a non-financial topic, exact same question. And if you've already stated what you would like your answer to be, by all means, feel free to repeat it. That's fine. And the question is real simple. If you could leave our listeners with a single thought today, what would it be?
I think our industry is one of the most important industries, the energy industry, whether it's oil, gas, wind, electrical, or whatever. And you use it every day of your life, and you need to understand a little bit more about it. And I think not only is it a good investment, particularly at this time, but it's also a hedge against if oil prices go to $200 a barrel, or if natural gas prices go to $10. If you own some of this stock, it's a hedge against what's going to happen to you as these prices fluctuate. And that's I'm proud of the business that I'm in. I've always done as much as I could environmentally to make the surface appealing and not damage it. And so I have no problem with it. Although some people think that if you're buying into oil and gas, you're killing the environment, and that's just not the case.
No.
So
No, taking care of the environment is an energy-intensive task.
True.
Yeah. All right, Cactus. It's always a pleasure to talk with you. Thanks for taking time out and coming to talk with us today.
No problem, Dan. Great to see you. Corey, take care. Hope to see you guys soon.
Thank you.
Yeah, we'll see you soon.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.